Everybody, take their seats. I think we're ready to get started. We do have some approval of minutes to make, but we don't have a quorum just yet, so we'll go ahead and get started. And when we get that quorum, we'll step to the side and do that. But I'll ask the clerk to please call the roll.
Senator Rocky Adams. Senator Douglas.
Present.
Senator Girdler. Senator Howe. Senator Neal. Senator Schickel. Senator Smith. Senator Storm. Senator Turner. Senator Yates. Representative All. Representative Bentley. Representative Bray. Representative Duvall. Representative Frazier Gordon. Representative Gooch. Representative Justice. Representative Lewis.
Here.
Representative Lockett. Representative McPherson.
Present.
Representative Pollock.
Here.
Representative Rourke. Representative Roberts. Representative Rudy.
Yes, sir.
Representative Smith.
Here.
Representative Stevenson. Co-Chair Carpenter.
Here.
Co-Chair Meredith.
Yes, sir.
One more after
We appreciate everybody being here. We need one more before we get a quorum to do our minutes, but we'll go ahead and get started now. Got a good agenda. Shouldn't take too long, but it's informative. So the credit union industry, I think, is here. If they want to step up to the table and give an update, I'll have all you guys, all familiar faces, introduce yourself for the record, and ever how you want to proceed forward, I'll allow it. Good to see you all. Thank you for coming.
Good morning, Mr. Chairman and members of the committee. Thank you for having us here. We appreciate the opportunity to speak. My name is Kyle Haggerty. I'm from Kentucky's Credit Unions, our trade association. I'll let these two gentlemen introduce themselves, and then I'll get started.
My name's Larry Lucas. I'm the president and CEO of Ashland Credit Union.
Good morning. I'm Jim Cash. I am president of Kentucky's Credit Unions.
All right. So, again, thank you all for being here. Thank you for the opportunity to speak on what credit unions are, how we are working to better the lives of Kentuckians, and why we do that. I'll give some brief remarks and then throw it over to these gentlemen. As a bit of background, credit unions are uniquely structured, distinguished by their not-for-profit status, where all earnings are returned to their member owners through the lower rates on loans, higher rates on savings, and generally less and lower fees. Right? And I said member owners. Credit unions are not-for-profit, member-owned financial cooperatives. Member ownership is based on the principles of democracy, democratic principles. Each member of a credit union has one vote in its governance, whether they have $1 in their account, $100,000, anywhere in the middle, equal vote on the governance matters. This unique structure has proven over time to produce a plethora of rewarding outcomes for those member owners. Specifically, in terms of rewarding outcomes, just in Kentucky, there's over 6,000 jobs directly supported by the credit union industry. Short-term loan rates, just as a couple of examples, short-term loan rates are on average 400% lower than competing sources of those short-term loans. And even in the face of economic trends pushing towards consolidation, centralization, and the tough market that we all see, Kentucky credit unions have been able to add branches and bring the benefits of member ownership in one's financial institution to 24 new counties over the last 10 or so years. All that said, Kentucky has 56 of its own credit unions, 18 state chartered, 38 federal chartered, all focused uniquely on uplifting their member owners and helping them achieve their goals of financial well-being. In service of those goals of financial well-being, I know all 56 could tell any number of stories of individual members, programs they're offering, ways that they really put into action that not-for-profit model. While all of them could tell stories, I know that Larry and Jim are eager to tell some of their own, so I will hand it off to Larry here. Thank you.
Thank you, Kyle, and I thank you guys for letting me come tell you our story. I truly do feel blessed to be able to be in the credit union industry, an industry that's truly trying to help people, probably much like how you all feel blessed sitting in your seat to be able to help the people of Kentucky. So, so basically, I've got about three stories here that came to mind when Kyle asked me to have this opportunity. The first one, and some of this is things we do every day, and so I just wanted to highlight one big win that we had for a member. First of all, we call our customers members because they are part owners of the credit union. So when I use that term, that means that's a customer / member. But this family came in. They had accumulated a lot of unsecured debt, and we have a debt consolidation loan product. And they came in asking for that product. So we, ran the numbers, and we were going to save the family about $200 a month, real money. But our financial wellness consultant dug a little deeper and found that they actually had equity in some recently or relatively newer cars, or cars that we could use as collateral. So instead of just saving that family $200 a month, we basically saved them $600 a month by using the cars as collateral and refinancing their debt under those. Now, and that's kind of highlights the difference that the credit union makes, is we'd have made more money in the debt consolidation product. But for the members' benefit, because they are part owner, as we went that avenue, presented that option to them, and they were pleased because by refinancing those cars, extending the terms a little bit, their car payment didn't even change. So it was like found money for them of $600. So it really make a difference in their lives. Another example that we have is we call it an easy refinance loan product. It's an in-house product for houses. We had a family come in, and they were in a little higher rate mortgage and wanted to refinance, but their place that they currently had their mortgage would not look at them because the dual income family, but one of the incomes, the person was on disability, and they said, well, your income's dropped significantly, so we're really not going to look at refinancing you at this time. Well, we were able to refinance that family, and save them 2% on their loan. So another success story that we had for our members. And then one last one is something kind of unique that our board decided to do. One of our principles is financial education. And so we established and hired a financial education specialist role. They do some things in-house, but they also go out into the community and into the schools and work just teaching financial principles. So this past year, a few statistics here, they've taught some classes at local high schools, conducted over 10 events, reached approximately 627 students, ranging from third graders to seniors. It doesn't matter, what they want them to teach. We're willing and ready to use this individual's time for that. But they also taught some classes at a place called Ramey Estep's Home, which was a place that was for men and women in recovery. And so another way we can give back and try to help those that are trying to get up off the ground, basically. So it's a way that we can step in for that. But we also conducted something unique in the high schools, 6 local high schools. We did reality fairs. And so the way the reality fairs work is the students come in and we give them an envelope, and now they're assigned a job. So their job may be, I'm a doctor, or I'm a restaurant worker, and so here's my income, here's my family, here's how many kids I have, and then they've got to make lifestyle choices to see how to budget. And so it's a fun game to play, but we call it reality fair because there is reality in there as well. They have unexpected expenses, they have things that come up, and they got to figure things out that, I can't afford the vacation to Hawaii. I need to do a staycation instead, and things like that helps them. So a lot of like I said, I feel blessed to be able to do what we do. A lot of what we do is centered around helping others. And so just, again, thank you for your time to be able to tell my story. So, Jim, you want to?
Great. Good morning. Again, my name is Jim Cash. I have been working with Kentucky's credit unions for just over a year now. But I've spent nearly 3 decades in the credit union movement. I started working at the Walt Disney Company. I worked for Darden Restaurants. I was a consultant in the industry before joining the league here in Kentucky. And I've always been attracted to kind of the passion, right, that credit union folks have towards their member owners, and the compassion that they have for their well-being. And I've got to say, my association with our 56 credit unions in the Commonwealth has just really intensified that feeling that I have. We've been in the credit union business in Kentucky for more than 100 years. So there have been credit unions serving Kentuckians for that long. Right now, we have almost 1 million Kentucky residents who are members of a credit union. Our not-for-profit structure enables a delivery, to Larry's point, of exceptional value and convenience and service levels that are really, again, unprecedented in our industry. Credit unions have delivered more than $93 million in direct financial benefits to Kentucky families annually, and another $36 million in indirect benefits. So we're really reinvesting in the state. Since the beginning of this year, our credit unions have funded more than $1.6 billion in direct loans for Kentucky families. These loans have helped members buy and refurbish homes, fund small businesses, purchase vehicles, and consolidate debt. I'm glad Larry was able to share just a couple of examples of those particular loans. This success is accomplished despite unprecedented challenges faced by our credit unions. Our traditionally conservative financial management principles have really protected us against the volatility of the interest rate market and a recession-like environment. In fact, the credit union industry has never been more financially strong than it is today. Evolving consumer expectations require considerable investment of capital to ensure our credit unions can deliver products and services when and where their members demand. Increased regulatory scrutiny and shifting legislative priorities create additional pressure on credit unions to not only thrive, but in some cases to even survive. Credit unions play a vital role in filling the voids created by other traditional banking providers. Those voids may be geographic. They may be serving disadvantaged consumers, customized product or service offerings, or pricing that's advantageous to the member, not to the financial institution. Not only to say to Larry's point about making a conscious decision by the credit union to put the member in the product that works best for them and not what works best for the institution. It's of the utmost importance that Kentuckians have multiple financial service options that include the not-for-profit cooperative model. It's clear that Kentuckians who choose credit unions improve the financial health of their families and the health of their communities to the tune of tens of millions of dollars in direct benefits. We want every Kentucky family to have the option to choose a credit union. We'll work hard to ensure our credit unions can answer that call. Thank you for your time, and happy to answer any questions if anybody has any.
Thank you all. We do have a question. Senator Howell?
Yeah, thank you. Thank you for your presentation today. One of the things I believe Larry was talking about with the financial education piece, and one of the things that we struggle with in Kentucky and everywhere, and trying to figure out what to do about it from our standpoint too, is I think that probably none of us have enough financial education coming out of school or anything like that, but we have people that are reentering society either from incarceration or from a drug addiction type of cycle. And I like that you mentioned that you had worked with one of those centers. Does the Credit Union Association have a model or something like that you use for some of your financial literacy pieces with groups like that? I would think it would be tailored a little differently than what you would go into a high school with.
As far as what we use right now is internally developed. So we just developed it ourselves with what we felt like the needs were. In some ways, budgeting's budgeting, and our view is we have to equip the person. We can't do it for the person, and so we tell them what to do, but they still have to be the ones that own it and do it. And that's where some of the challenge comes in, because sometimes you want to be dad and mom and say, let's do it for you, but we can't do it for them. They do have to own it.
That was kind of part of my question. Yeah. It's somebody that's 38 has a different life experience, even though they may have had some struggles, than somebody that's 18 and doesn't know what it means to balance a household budget or anything like that. So I just wondered if y'all had any sort of template that you had.
They could come and hang out with me if they want to see what unexpected expenses is going to feel like.
No comment for me.
Representative McPherson.
Yes, I'm just gonna. You said you all did some education in the high schools through the reality program, and I've taken part in that and served as one of those people that let them spin the wheel and see how many kids they're going to have, or what they're going to do, or what vehicle's going to tear up in what month. And so, do you all have a program where they can come in and be a member before they graduate high school, where they can have a savings account and do some things like that? Do you all have that process?
No, absolutely.
Yes.
Absolutely. We would want to have the parents come in, because a lot of times the children would bank with the parents, but we're open to just the kids coming in as well. So,
Sure.
Yes, sir.
So, yes, when I was like 12, 13 years old, my father said, you're responsible for your bills. You pay your own lunchroom money. You pay. It does make a difference in what you ask for Christmas, I guarantee you.
Yeah.
I asked for clothes and things that I didn't want to have to go buy myself. So I think the earlier we get those people started, and the better off we do. When they do get out and buy that first vehicle and make those first big decisions, if they've learned how to maneuver and do. There's so many people that don't know how to balance a checkbook, and they don't know how to look at a bank account and realize they just know how to go how to swipe a card and think that mom and dad's going to put money in there and it's going to continue to be there for the rest of their life. And I think that's a life lesson learned, but I appreciate it. Thank you.
Thanks.
I still write checks, Mr. McPherson, in my business and stuff, and all my little younger friends are like, "Well, you paying us in Confederate dollars or something other?" They don't even know what a check is. I'm like, "Come on, man! They want me to Venmo them everything and all this stuff." So it's a new world. Well, gentlemen, we appreciate you all coming in, and I always appreciate what you do for our communities. All of us represent communities that have multiple locations of your facilities in them, and we know what you do for our communities, and we appreciate that very much. And we look forward, if there's anything that we can help with or help our consumers with that you all provide services for, we'll be here in the next few months. The session starts before we know it. So thank you all for coming in. Oh, it starts in January. Is that a couple months, or is that? Oh, I didn't know if you knew that or not. We're glad you're here, by the way, Mr. Floor Leader. I think our next group to come up is Kentucky Bankers Association. I see maybe you're down a member or down an associate. So, John, if you want to introduce yourself for the record, and we look forward to your all's statements as well.
Mr. Chairman, members of the committee, I'm John Cooper of the Kentucky Bankers Association. Tim Schenck is our Vice President and General Counsel of the Bankers Association, and Ballard was going to be here today, but he had a couple of assignments, one with the OCC and the other with our executive committee to work on an issue, so he sends his apologies. We'll be at the next meeting.
We're ready for you all to get started.
All right, great. Thank you, Mr. Chairman. Thank you, members of the committee. I know we see you all regularly as part of the 2024 session. Appreciate all the hard work you all put in for this session. I thought we had a great session overall from a banking industry perspective. We passed a number of bills related to consumer protection, bank modernization. We got through the UCC bill, some settlement with minors. So really cross industry-wise, thanks to a lot of your all's hard work. So appreciate all the effort you all put in there in getting through a lot of this. One thing I want to talk about a little bit was some of our 2025 session priorities we have coming up. And I know here's a list of the 4 things that we intend to talk about, but it's sort of odd to be in a position as a bank representing banks and serving an association to talk about examiners and taking care of examiner pay. But that's probably our priority number 1 for this session. Because as a banking industry, we want the best examiners to ensure that our institutions are the safest and most sound institutions in this country. As you all recall, we filed a bill this last year, or promoted a bill this last year, talking about examiner pay within the state of Kentucky. And the reality is we face some challenges here. And with all the hard work our commissioner puts in, the reality is that there's some lack of funding there to promote what's happening with the Department of Financial Institutions. Here's some of the figures related to that. So the number of examiners leaving in the last 3 years, we've had 16. Most of our examiners leave after 5 years. Average tenure for those leaving for federal agencies is around 8 years. I think we're floating around eight vacancies right now. I haven't talked to the commissioner about that as recently, But the reality with all this data is that you see is that we are losing our experienced staff, and we're becoming a training ground for the federal examiners. So they're here 3, 4, up to that 5th year. Then they go off to the Federal Reserve, FDIC, OCC for more money. So you can look at the salary comparisons here. So look up through Examiner 1 through Senior 1, which is, those are all kind of commensurate-ish numbers running, and those are usually your first 5 years as an examiner. But then once you make it to field supervisor and branch manager, those are really disparate numbers. When you look at what you'd make at the KDFI compared to FDIC or Federal Reserve, in some of those cases you're making double, if not triple, for the same job within 2 to 3, within 5, 6 years in there. So one of the things we want to do is fix that. We see matriculation of some of our best examiners to the federal agencies, and we have the money on hand to do that. As part of the KDFI, our banks pay assessments along with the securities industry, along with credit unions, and that sits in a trusted agency account with roughly $6 million in overflow every year. And that money's not part of a sweep. It just sits there. And we'd like to be able to put that money in the hands of the commissioner to allocate that so that we can retain our best examiners and ensure that we have a safe and sound financial institution system here within Kentucky. This also shows where we are a lot of that money comes from the security side. So you can see here, the security side, the numbers are even more vast, with your average examiner, and this is obviously on the federal level, but making $204,000 per year. But what we have to do is make sure that we're able to retain the talent and not just be a training ground for these federal regulators. So really, that's kind of our big push on something we worked on last year. It was hit with a rather large fiscal note, but when you look at it from the perspective of that money already sitting in the trusted agency account and it's not allocated to anything else, really that would all pay for itself. Our second major priority is new market tax credits. Last year there was House Bill 485 filed regarding that. And in short, what these do is incentivizes banks and financial institutions to make investments in communities that need housing. Right now, that number is limited to $10 million per year by statute. The proposal last year was to increase that to $20 million. In short, there was a study done by Kentucky Housing Corporation along with a large national research firm, and it found that there were shortages in housing in 120 counties and 15 area development centers. I know that comes as no surprise to you all. You're familiar with the housing shortages we have here in Kentucky. But one of the things here's kind of the graphics that bring this up to light. And if you look at the far left section of this, these are what the needs are. So looking at area median income, those on the far left are those with the greatest needs. So those with the least amount of income have the most amount of need for housing. And part of that shortage just is that there's just not availability. But new market tax credits create a great opportunity to do that because it has some tax incentives for the financial institutions involved, but also providing housing at a lower rate that traditionally would be involved in a true market. So that's going to be another one of our requests for this session. Another big issue is historical tax credits. I know you all are familiar with those and probably see those in your towns. We have a number of